Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 16th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the ES in the daily time frame. You'll notice right here, there's your new FOMC key level from December 15th. It is 46.20 It's exactly 4 points higher than the November 3rd FOMC key level. And right now, we've seen mostly chop around that level. At the moment, we've seen a straight rally away from that level, and we're holding at the highs of that rally. And again, most of that move came in the final hour of the day. So from 46.40 to about 47.05 or so, that was the entire final hour of the day away from that FOMC key level. At the moment, 4,700 is going to be the key level to watch here. Failure to hold that level could open up quite a bit of a pullback into yesterday's range. But right now, testing resistance at these highs. Key zone here to continue to watch as the day develops. All right, let's take a look here at the NQ. The NQ also rallied away from its FOMC key level yesterday. The new one here, 15,844. The November FOMC key level a bit higher here, 15,968, so about 120 points higher. So right now, 16.4 continues to be a major area of resistance for this chart. Prices rallied away from that FOMC key level, but is now already seeing some signs of weakness at these highs here today. This also coincides with the previous week's high as well. So the previous week's high is right there. Price pushing beyond it and kind of pulling back right now. So at the moment, 16.4 continues to show resistance. Even after that FOMC key level goes bid here, are we finding an edge that will lead to a snapback to that level? And we continue to coil up right here. Where and when is that energy going to be released? Is it going to be released a bit more to the downside and then we continue higher? Are we just going to float to the upside and push higher right away? Or is this going to lead to a bigger sell-off ahead? Major resistance here that you just can't get beyond 16.4. Does that lead to some sort of major correction back toward yearly value, for example? So right now, keeping an eye on 16.4 as a key level here as this thing continues to develop today. Looking at crude oil, you'll see with crude, we have a narrow range that continues to develop. In the previous session, we were looking for a failed low. That could give us a strong low and an idea that this thing is headed higher. Yesterday did that pretty well. We got a low here where it was a failed new low, a strong push through the previous sessions, midpoint, and then we closed near the highs of the day. That was really solid, really solid. So the goal here today, any pullback to 71s could provide a bounce towards 73 today. Crude oil's been averaging $2.40 on a 5-day basis, $2.40. So today's range could easily be two handles of range, and if we can find the low of the day, which currently is 70.87, you can add 2 points to that or $2.40 to that, and that will give you a good upside target. So 73s could be the upside target today if we find a strong low in crude oil. Keep an eye on 70.50 to 71 for signs of a bounce. Taking a look here overall though, this one right here continues to remain within the range. So if we don't get a push through 73s, we could easily go to 73 and stop and drop and stay in this range. So we are still in that developing range until proven otherwise. And if we quantify it here, let's update it. 1, 2, 3, 4, 5, 6, 7 days. Today is the 8th. So on an 8-day developing basis here, there it is right there. This is our new quantifiable range right there. Significant compression here. 13, 14 points would be the upper end, and you're still looking at about 10, 11 points on a medium basis. So big time energy developing here in crude. Which way will that energy be released? We'll be watching very closely. These edges, 73 on the upside and about 69.5 on the downside. All right, let's take a look now at gold futures. Gold got a pretty solid rejection yesterday. This is the one thing we mentioned pre-market, is that we've gone sideways for 10 straight days, likely ahead of the FOMC, but we haven't seen a rejection yet. We haven't seen a forceful rejection yet that says this is the bottom of this move. Instead, we had a nice range, and now we have ourselves a rejection. Price dropped on the initial statement and rallied right away. And you can see right here the new FOMC key level, 1762s. Very solid finish, a buy signal at the previous month's low. This also occurs on a failed breakdown where price tried to break down, failed, and now the slingshot high move higher is already on. Now this is where it gets interesting here, is that we've already slingshot all the way back to the top of the range. Can we get through that range? That's where 1800, opening above 1800, will get this thing going back to the upside. Now keep in mind, we have a 10-day narrow range here. Let's quantify that here. There you go. Now on this 10-day narrow range, you can see how compressed it was. We should be looking at least 70 points of a breakout move. Normally we've been seeing at least 100, so let's call it 75 to 100 points. If this is a strong low, it's 1750. You can add 100 points to that, and that gets you 1850. If you want to add 75 points to that, then you're looking a bit lower. You're looking at about 1825 from that low. So that's the same type of analysis and quantification we did back here, where we had this narrow range that suggested we would get about 80 to 100 points of movement. We had ourselves a strong top at 1880, and thus identified 1780 as the likely target, and we got that move. So right now we're building an even more significant range in terms of number of days, and the breakout could be significant if we can get through the top of that move. Now that we have a strong low, again, we have ourselves some targets to shoot for. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.